All right, it is Saturday, March 2nd, 2024, 10:09 a.m. So I wanted to do a video just to illustrate and show a few tweaks that I've made to my previous strategy and process for intraday trading. So just wanted to share that with you all. Hopefully it makes sense. Hopefully it's something that you could use and start putting into practice right away. So first thing you'll notice, if you can see my screen here, this is the daily chart. And let me change this to GJ. I want to do this illustration using GBP JPY. Now, of course, what we utilize here can be used for any instrument, and I'll illustrate that as we go along here. So what you want to do is when you first get to your computer, trading terminal, whatever you use, your phone for the day, first thing you want to do is you want to get the daily bias. You want to get what the overall sentiment is for that particular instrument, directional bias, not necessarily the trend, because what we're looking for again is the daily directional bias. And so what we do is, this is GJ, the daily chart. So the first thing you want to do is look at that daily candle, and you want to see where we are in that daily candle. So I'm gonna take the UT bots alert off real quick. We'll put that back on later. We don't need it right now. All right. So one thing to understand is that with the color of the candles, the color of these candles here, these are just price candles. These candles right here have nothing to do with volume. So keep that in mind, right? This does not indicate volume. It only indicates price movement, the movement of price. Now the candle is going to be either red or green based off of if the opening of the candle is higher or lower, or if the current price of the candle or movement of the candle is higher or lower than the opening price. So if the opening price of this daily candle right here is currently lower than if the current price of this candle here is currently lower than the opening price, which is right here, then the candle is going to be red. If the if the current price of the candle or movement of the candle is higher, if the price is higher than the opening of the candle, then the candle is going to be green. Just want to make sure you understand that to put everything into context, right? So here's the strategy or process that you want to keep in mind, or that you should be using. So very first thing is getting the direction of bias, right? So what is the direction of bias for the day? So for GJ, for Friday, and again, we're kind of looking back in time right now, so we can't really see it real time, but hopefully you can understand and get the gist of what the strategy is. So you want to see if the overall current price movement, sentiment and direction, right, is higher or is it lower? Is the movement of GJ higher or lower than the opening price? That would determine whether or not right now if the market is heavily bullish or heavily bearish. Okay. Now, once you are able to determine that, right, if the market is bullish or bearish, the directional bias for the day, then you can start the other part of your analysis. So, all right, we look at this candle, we come in, let's say we come in, and obviously for Friday, GJ was pretty heavily bullish, right? So if you would have came in and start looking at your charts, around, let's say 8 o'clock, right? That's a good time to look if you don't start looking before that. But 8 o'clock is a good time because that's when most of the you'll see most of these indices are open and moving. The price movements are moving, because this is going to also be part of the strategy and getting the directional bias for the day and as the day moves on. So when you look at this right here, so you look at this candle and you see that this candle is green, right? Basically indicating that GJ for the day is heavily biased to the upside. Okay, so we got our directional bias for the day. Okay, so to add confluence to that and to verify that, you can look and see the currencies by themselves. This is very, very key to our fundamentals. So, here, these are our technicals. When we're using a chart, these are our technical analysis, right? And, we look at market structure and all of that stuff, right? All of that plays a part, but right now we're talking about directional bias. This is the first step of our daily analysis. All right, so determine what the daily movement of price is, bearish or bullish. So now we've determined that it's bullish. We look, and we see, okay, the British pound right now is bullish, right? So there's a lot of buying activity for the British pound all by itself. So that means there's a good chance that we should be buying GJ. We should be putting buys in or looking to put buys in, right? Now, the next thing you want to look at the second currency in the pair and see where that currency is. Now, we see that GJ or the Japanese yen is bearish, right? So that means there's quite a bit, there's more selling of the Japanese yen than there is buying of the Japanese yen. So that tells you that, again, for GJ, it verifies what our directional bias is, right? So use the currencies by themselves. Again, after 8 o'clock, you can see all of them pretty much moving. Before 8 o'clock, you won't see all of them moving. The only one you'll probably see moving at that time is DXY. DXY, pretty much when the market is open, moves 24/7. You'll see movement here on this side on your watch list. But the rest of these don't typically start moving until the opening of the Forex market. So you'll see the rest of these start moving, and you can start to get an idea of, whether these currencies individually are selling off or buying for that day. Right. And you want to look at the rate, the rate at which it's changing. So you can see DXY change by a negative 0.261 compared to the Japanese yen, negative 0.05. But again, we will look at this later because this is how it ended for the day. Not necessarily what it was at the beginning of the day or when we did our initial analysis for the day. But you do want to look and see what, these currencies look like after 8 o'clock. And again, before 8 o'clock, DXY, I will tell you, was it was bearish for the most part. I did not know what the Japanese yen was necessarily, but I knew that DXY was a little bearish or what have you. But in any case, again, we're talking about the British pound and the Japanese yen. So we can see that the two of these are in opposite directions, which is good. That tells us that this should be a heavily bullish day rather, for the GJ, right? Because the British pound is a lot stronger bullish than the Japanese yen is So that tells us that it's the pair alone should be pretty strong on the bullish side. So we're looking for buys for GJ. What does that look like? Well, good question. Now that we got our directional bias, again, we can look at volume and see what the volumes look like, but you really don't need it for right now because we're looking at the daily directional bias. So the next thing you want to do is, or what I do, is I go down to the 15. So let's look at the 4-hour real quick just to get an idea what price looked like on the 4-hour. And again, we're looking at snapshot in time. Unfortunately, I can't go back on the daily to get an idea of where that was sitting at 8 o'clock in the morning. But again, just to illustrate and give you a gist of what was going on. So we can look, let's go back. Okay, so here we are, 9 o'clock. So this is the 4-hour. This is the 4-hour chart. So if you looked at the 4-hour chart around, yep. So let's say here, all right, this is what you would have been seeing for the most part on the 4-hour chart around that 8 o'clock hour. You would have saw pretty much something like this, right? And basically, we see that there's a pretty good rejection at this level here. Again, line it up, kind of with this level right here. We see a pretty good rejection of price. So price opened right around here, this 4-hour candle, pushed up a little bit, and then came tumbling down or what have you, and then eventually pushed back up to close back near the opening price. Pretty interesting stuff, right? So then that 9 o'clock candle, so the opening of that candle immediately pushed up immediately pushed up. And that was probably due to the 8:30 news or what have you, which is probably what pushed this up. But again, just to give you an idea of how you can combine your daily directional bias with trade setups. So basically what you're looking for at that time is you're looking for a pullback, right, in the opposite direction of your daily bias. So we're going to go to the 15-minute because that's really where we're going to start to look to place our trades, right? So looking here, going back, all right, we can see that here. So 7:45, we see this activity here, right, between the 7:45 candle and this 9:15 candle. So basically, price was in a consolidation all this time, right? And then pushed down. So again, we're looking for buys. So we would have looked to get in on the buy right after this 10 o'clock candle, the 10:15 candle. So we look to get in on the buy and ride the market up. So let's see if we would have got in on the buy. 45 pip move. So 45 pip move or so. Okay. So that's that. So, but we can see that we missed a large portion of that move. So the directional bias, let's go back to the daily to see how many pips GJ moved for the entire day. So from here to here, 110 pips. Okay, so we go back here. And again, we're looking to trade in the direction, again, in the direction of our daily bias. So again, looking to take buys. So you wake up and we see, so looking at that 8 o'clock time frame, again, we see that price is just consolidating. So no real indication of what direction price is going to go in. So it's good not to trade at that time. But again, still looking at the strength of the currencies and all of that. So we're looking for pullbacks to the downside for us to get involved with this to the upside. So again, we're looking for pullbacks to the downside and opportunities to get in on buys. Now, what does that look like? So if you remember anything about the volume process that we look at, so you can see that we had some climactic volume right here in this candle, this 10 o'clock candle. So basically, in the climactic volume is pretty much stopping volume. So what this candle pretty much did was came down and grabbed the liquidity from these bottoms right here, these bottom swing points. So we grab the liquidity and you see we start to reject, right? And eventually we close right here. Okay. Now we look at this and we say, okay, if you remember about our volume analysis and how we do that, again, climactic volume. So we look to see what the next candle is going to be. And we see that, or here's another way to do it, probably a more efficient way to do it, is once I see this right here, again, more volume in this candle than the previous down candles, right? So again, if you remember our volume process, that indicates that this trend, this downtrend, temporary, is pretty much coming to an end, right? So we can look to start looking for buys to get in on our directional bias, right? And again, this is just an illustration of how to do this on a daily basis. It does not look the same every day. But again, it keeps you on the side of the market of the direction or the sentiment of the day. I'm not going to say the trend because as you can see, there is no real trend in GJ right here, right? There's no trend on the 15-minute. This is pretty heavily consolidated for the last couple of days, if you can see, or what have you. So we're just looking at the direction of bias, and we know that the direction of bias is to the upside with this particular currency pair for the day. So we're just looking to get in on that upside, those upside moves. And here's our opportunity right here at the 10-15 candle. So what you do is once you see this, right, remember in the volume analysis process, then we're looking to get involved. So what I would do, or what I do, is I go to the 1 minute. Now, here's where we're going to utilize our UT bots indicator here for our indication of when to get into the market, buy, sell, things like that, right? So we said we were looking at that 10:15 candle or that 10 o'clock 10:15. So let's go to see what that looked like at that time, because this is going to give us our indication of exactly when our strike point, exactly when to get into the market, right? So what you want to look for, you go down to your 1 minute, right? And what you want to look for, again, once that bearish candle finish, and we say we're looking to get involved in the market. What I use the UT bots for is for that strike, my entry. And the reason I turned that back on was because I turned that back on was because a lot of times when you're trying to, put your entries in on the market, you want to make sure that you're timing it properly, especially on the 1 minute, because there's so much noise, right? But the algorithm in the UT bots kind of helps to time that a lot better. So anyway, with that being said, right? So that down movement, that bearish movement had come to an end. So we know we're here now, right? We saw the rejection and everything. So this candle right here will be our indication to get involved in this market. So again, doing our analysis on the 15-minute, and now all we're doing is looking for our entry point. This will be our entry point with this being our entry candle. So what you do is after this candle closes green, right? This is our buy signal because we're looking to get in on a buy. After this candle closes green, then you're going to put your order in for a buy. Now, you're going to put your stop loss at the swing point. You have to put it at the swing point because that is a protected area. That is where the sellers said we're no longer interested in selling, or you have a lack of supply at that point. And this is where your demand for GJ for the British pound came back into the market again with our daily bias and sentiment. So let's see how many pips of a stop loss that would be. So from here, right, you're gonna put it there to where your entry is. Your entry is going to be right here. All right. So a 7.8, let's say 8 pip stop loss. So an 8 pip stop loss. Okay, I'm good with that. All right. And let's see, what did we end up getting? So we got in the market here, and we do see that it pulled back a little bit, which is to be expected, right? So we came here, and let's see, before the market made any type of significant bearish turn, we had 17 pips, and then before it did anything later on, we got 30 pips. So this was a good 30 pip move out of this particular move right here. So that's 30 pip move, and I'm pretty much done for the day. I got 30 pips out of the market, so I'm good. No need to, put another trade in. I'm successful for the day. And we can see, again, we can see how the volumes, were treated the rest of the day. Of course, the volume starts to decline, especially with the British pound and the Japanese yen as the day goes on, especially when you get past that 12 o'clock hour. The volumes typically start to decrease quite a bit. Here, we still had quite a bit of movement in volumes, but this is the 1 minute, so a lot of noise anyway. So, but we only use the 1 minute for our entry. That's it. That's all you're using the 1 minute for, your entry. And then once you got your entry, so let's do this. So, because the question then becomes, where do I exit? Now, on a regular basis, because again, it just doesn't look like this. It can be difficult to determine, but look like we ran out of time. So once you got your entry, make sure you, for your exit, the exit part of the strategy, you want to, again, you do your analysis on the 15-minute. This is where we're doing our analysis. All right, so we got to go back to our entry area. Okay, so this was our entry. So we were able to get in on this candle right here, right? We were able to get in here. Now, one of the things you can do is once you got your entry, remember, we're doing this on the 15-minute because the 15-minute is what's going to dictate. Typically, what you want to do is you want to target fair value gaps and swing points. So if I put in a buy, right, my TP should be around a fair value gap if that's what comes up first, or a swing point. If there's no fair value gap, then I'm looking for a swing point to take my profit, right? And here we can see, this is 15 minute. This is the 15-minute. And this is also later in the day on a Friday. So volumes and stuff start to drop off, as you can see right here. Not a lot of volume and liquidity in the market anymore after a certain time period. So you can't really expect, it's more than likely if you get in. Again, this is just the strategy to get in, determine the bias to get your first trade of the day or only trade of the day if it works out that way. When that comes, you have to be patient. You can't force it, right? We just don't know when that's going to come. Again, just depending on what time you wake up, right? And start looking at the market. But this is the analysis you want to do when you're doing that. If you get up before, around 5 o'clock, before 6 o'clock, then you could have got in on this move, right? Could have got in on this 530 candle, doing the same direction of bias from the daily that we did, that I showed. And then you could have got in on, let's say, a potential 50 pip move. Again, it's just all about timing, right? And I would have took it to this one right here because there's no fair value gaps. We can see that this candle right here pretty much engulfed this previous candle right here. So no fair value gaps in this area, right? So no fair value gaps, but we can see that price did take a good turn right here. So this is a good place to take profit. I would look to take my profits right here. So we'll bring this down just a little bit. And it be something close to, let's see, so we'll entry right here. So I will target right here if I was to get into this move. So roughly about 49 pips, about a 49 pip move. But typically it's safe for you to target, again, whichever one comes first, if there's a fair value gap. And right here, the fair value gap is the wick of this candle, between the wick of this candle and the wick of this candle. So this is where your fair value gap is for this particular up move, right? So you target the fair value gaps or the swing highs and lows for your TP. You definitely need to be considered when you're putting in your orders, either to the buy side or the sell side. But again, we got our bias done. And if you did this one and you were taking it, again, we would have got involved in this candle, right? In this 15-minute candle, and then looking at the fair value gap here. So the fair value gap is in this area. So like I said, the tip, it begins right here, the tip of this wick and the tip of that wick right there, right? So if we would have took it in that fair value gap, it could have been still a 25 pip or so move. Again, you're missing probably the height of this move. You're missing probably 20 pips, but you still got 25 out of it if you took it to this fair value gap. But those are the safest ways to enter and exit the market, because the market is going to typically have a reaction. It's definitely going to have a reaction at fair value gaps and swing points. So those have to be considered when you're looking to take profit. So if you have a fair value gap, then you should look to take profit in those areas or what have you. So that will help you out. And we could take the UT bots alert off real quick just so you can see what the candles look like. All right. So like I said, we have a fair value gap between here and here within this candle. So you see price did have a reaction once it entered into the fair value gap area, pushed down a little bit, pushed back up, and we can see that price probably started mitigating that fair value gap, and which, pretty much did mitigate the fair value gap because we closed here. But again, the volumes were pretty low at that time. So not a lot, happened. Not a lot happened for the most part from a movement perspective or what have you. So that is pretty much how we want to look at getting our directional bias for the day. That's the first thing you want to do. And again, you can continue to monitor the strength of the currencies, to kind of see, is GJ gaining strength, while I have my order in, is the Japanese yen gaining strength while the pound is losing strength, or is the pound continuing to gain strength while the yen is continuing to lose strength? Those are things that you can look at to kind of determine, how strong your move is, while you're still in it, right? if it, again, we have our stop loss, right? We have a pretty tight stop loss. I would say once you reach a certain point, so let's say you did get your entry, we got our entry right here inside this candle. Probably after this candle closes, I will probably move my stop loss to break even. That way, this trade now becomes a no loss trade, right? That's kind of what you want to do. That way, you pretty much stay on the positive side of trading and profit pretty much at all times or most of the time, right? If price doesn't immediately come back and take your stop loss. But using this particular process and strategy, rarely will you see that happen. Throughout my trial for the E8, I lost one trade, and that was because I did get in early, which is why I had to look at, how can I get a better entry without getting into it early and getting stopped out. And that's why I went back to the UT bot alerts to get my entry on the 1 minute. Or what have you. So that's why I utilize that for my strike point. Again, just because of the algorithm within this particular indicator is pretty spot on. Again, just how you use it is what's important, right? Like I said, looking for those strike points. And I'm not looking to get involved until that candle gives me that signal. So green indicates buy, red indicates sell. So that's how I get my strike points using the UT bot alerts on the 1 minute. And I'm only doing my entries. Entries only on the 1 minute. That's it. Entries only on the 1 minute, utilizing the UT bot alerts indicator. So that's that right there. We go back to the 15 minute, but the 15 minute, looking at my my take profit targets and all of the rest of the analysis are done on the 15 minute, except for when I'm looking to get daily sentiment, bias, and direction. Okay. And we know where our liquidity is. You don't really need it, but I do like to keep this liquidity indicator here. But all it is just giving us the highs and the lows, the swing points and stuff, for the different time frames. Because as you go, you can see we got 4 hour liquidity areas. Again, nothing more than swing points. Then we got daily liquidity, daily and weekly liquidity areas. You're not going to see that on here because I don't have it from my settings. But again, that is the strategy. That's the strategy. That's the process. I hope this was helpful. I hope it wasn't too long. And you get something out of it and you're able to, place good trades and be on the right side of the market and profit as much as possible. So as always, thank you for your time. Thank you for your patience and good luck to you in your trading process and journey.